Welcome back to the Wyckoff crypto discussion. This presentation is for educational purpose only. Please stop the video and read the disclaimer. So the S&P is retesting the resistance of this huge trading range. This is a very logical place where you can encounter some supply. So far, the first rejection of the resistance has been very muted, so especially when you compare the supply with the previous attempts. But we have to recognize that there is a local volume increase at this level. So some profit taking is already occurring around the mean of this local uptrend channel. In case we pause here, a retest of the support line of the channel would be still very healthy. So we have to remember that there are many speculative assets right now that are, after the quick run in January, are showing some signs of deterioration of demand, and we will talk about this, especially on the crypto market. But before that, Roman, what's your take on the current market condition, especially the S&P?
Yeah, it looks bullish. Looks bullish, sounds bullish. I mean, it's a duck, right? So we are doing exactly what we're supposed to do. I mean, like, look at how we're approaching the resistance this time. 1, 2, 3, and then up thrust, and then a reaction into that. So supply is coming in. There are supply spikes right there. Definitely less supply, as Alicia has mentioned. So therefore, more possibility to go through. Before, every time we would have some kind of like more meaningful reaction to the downside. So far, very muted. Supply is actually diminishing. And again, like if we have this type of reaction, I don't mind that at all. Because this is compared, let's say, to this, if we stop here, would be very constructive. So it reminds me of 2012, the way how reactions developed after the sign of strength. And we are going through some kind of like vertical absorption right here. So either way, again, going down, up, or consolidating here as a test, and then breaking out also is okay. I think the key is just for us to maintain this stride and not to break this. So we don't want to see something like this, where we have a significant emergence of supply, significant kind of like aggression to the downside, maybe even more than this, and then a very weak rally. That's exactly what we don't want to see, especially breaking this level right here. That would suggest the retest of the support. Although, I mean, we still have to keep this scenario as a very low probability, but still an alternative scenario.
Great. Now let's look at the overall market. So we see that yes, all the indexes are like stalling a resistance right now. It would be totally okay to have some form of consolidation. But I think the most interesting information on this chart, Roman, is actually the volume signature. So we see an increase of volume signature on the Nasdaq, on the S&P, while the volume signature on the Bitcoin and Ethereum is actually decreasing. So basically, we have some supply emerging on the stock market and less demand in the crypto market. And I think this could be very interesting in case we have some minor correction, like the correction that we have shown in your previous chart, Roman, since that could create a nice opportunity to buy. But so far, buyers are in control. We don't see any sign of supply for crypto market. Other areas of the crypto market are showing short-term overbought condition. Roman, what's your take on this?
Yeah, I kind of like, again, everything looks bullish, but the big question, of course, is why we're not moving in cryptos right here. So, and we'll discuss this on Bitcoin and Ethereum charts, but yeah, this is a really good catch. Why is the volume signature different, right? So obviously some supply here. Well, we've had it before here, and at the point before. And for the cryptos, it just, in a way, I would answer this question: why the volume is lower than on the indices here, why supply is not so much more aggressive. I think because there is such an absorption on the way up. This was such a strong bullish move, absorbing supply here and absorbing supply on the way up, that during the reaction, we just don't have it.
So let's look at the crypto indexes here. So we see that the leadership index is still in an uptrend, but we are like in a small consolidation. I really like to look at the decentralized exchange index here because this is a classical sign of strength rally. And now I think that we need to consolidate. The supply signature needs to shrink a little bit here. But for the rest, Roman, I think that the market is still strong. And in case we have a backing up action for the central exchange, I would be very, very happy to build a significant position in this space.
Yeah, looks pretty good, from one event to the testing of that event. And then what I like here is we were looking at this was somewhat choppy. So you start thinking like, when I have the choppiness around the resistance, would we have the reaction? And instead we have an extension, and the extension is quite substantial here. So I'm really liking the idea of the sign of strength, and then just currently being in some kind of backing up action.
And when you look at the leadership index from the 4-hour perspective, from the next chart, Roman,
Okay.
basically I was playing with my PNF count on the 4-hour chart, and so we have multiple targets pointing to this $800 level. So I suspect that we need to see some kind of consolidation here, and after that we'll probably have a mini distribution and a possibility to enter on the way down. But for now, Roman, I don't see a lot of volume signature at the end of this channel. So I think that we just have to look for a break of this channel. But right now we are in the oversold condition. So far so good.
hmm Yeah, so a little bit of the increase of the supply in the latest structure here, on the way down, on the way up, on the way down, on the way up, on the way down. And then also demand, look at how demand is changing its signature, right? So we're slightly diminishing demand. So that diminishing demand is the cause for the supply coming in, and for the duration and the structure of this formation, being slightly different. So here, for instance, it's all about like this very important bars. Like for instance, this is a very important bar. This is very important bar. This is an important bar, and this is an important bar, or like a combination. So you have this spring below the first bar. You have this spring below the second one. You have a very, very strong conditions here of testing above that next bar right here. And this one here, we're already seeing it's not really a spring, it's kind of like a spring type event, where it's like a trading range. So duration here increases, and that just because a little bit more supply comes after the slight deterioration of the demand. So expected that this trading range might be a little bit different.
Great. In terms of capital allocation, basically the strategy of the last week is almost unchanged. So basically, we're looking to convert some profit, to do some profit taking and convert the profits from the altcoin market to Bitcoin and Ethereum once we have a meaningful correction. But right now we are still trading in the short-term regime, so 35% for short-term trades. I still hold a 25% of my crypto capital in equivalent of gold. I'm still in this position, Roman, but I've noticed that big shakeout reaction that we had. So I just want to judge how much demand will come after this shakeout. In case we
Okay.
have like yeah, exactly that. So far so good. So there is still not, so I think that we are still respecting the trend line, and I just want to see the velocity of the rally from here. So if we rally and we stall at the midpoint of that huge bar, well, that would be like an advice to me to trim a little bit this position.
Mm-hmm. I think, yeah, so there are two fascinating opportunities in the market right now for me. One is oil, and one is gold. So with gold, everything kind of unfolded the way how we expected. We said that we're in the second stage of the advance, which is the vertical absorption stage, And we would be expecting some kind of reaction of this magnitude. Well, here it is. It's of the same magnitude. Now, the key here for the continuation of the bullish scenario is to stop here. And I'm really happy for the third day to observe that there is no follow through to the downside. That's what we were like wanted to avoid, for the bullish scenario. And the key now is the ability of the price to come to the high of this bar to 1930. If it does so after the test breaks locally, then we could have the case of the uh, vertical absorption, local vertical absorption, and then continuation to the upside into the climactic run and into the all-time high. So that's kind of like my expectation relative to the previous high, just because of the character. This is just too aggressive, and we still have demand coming in. So this could have been some kind of event. So I know that some of the central banks were selling gold in the market. That could have been just like this minor kind of like blip on the chart. Also, we have not had any meaningful reactions up to this point. So this is very natural, a shakeout event. And those happened in the uptrending environment. So the key is just no follow through. Stop here. Or if you're gonna follow through, have some kind of very small down spread on the diminishing supply signature relative to the supply that has come in, and then start recovering. Basically the same pattern, only with slight variation right there. So, and the key with both oil and gold is that it could really, really have velocity as the price travels to the upside. So it's going to be very fun to see how those two are going to unfold.
Let's quickly look at Bitcoin. So the daily picture remains very constructive for the long term. The volume signature is contracting. So this is one of the lowest volume level on the chart. So we can clearly say that both demand and supply are decreasing here. So in this kind of instance, Roman, I prefer to see some kind of shakeout action because that's the character of Bitcoin. Usually we have like decreasing demand and after
Mhm.
that shakeout and buying on the way down. So that's still a possibility, I think. And right now we really can't trade to the upside this chart since the momentum is decreasing. So just what's your take on this, Roman?
Yeah, I would agree. I mean, first of all, just a very bad scenario, which is still bullish scenario, is just to go below the low of this bar right here. And usually when we create minus sign of strength, relative, let's say, to the global structure, that type of move, that type of reaction brings us back to the support. And here's the psychological dilemma for a lot of the people that did not get in on this rally, is that they just basically saying, give me a reaction, I will come in. I see this now as a bullish scenario. I see the bullish character. So once it goes down, let's say like to 22, I'm going to get in. My question to you is, what if it gets below 22? What if it goes to 20 and then below 20? Then the same thoughts that you had by not buying, at 18 before the rally unfolded is going to occupy your mind again. You will not escape it just because of the mental landscape that did not allow you to come in first. So with that, this type of the reaction is going to create this short-term capitulation again, because a lot of the buyers that bought, let's say, somewhere here, and then they saw the reaction. They bought somewhere here, and then they saw the reaction. They bought somewhere here, they saw the reaction. Their behavior is conditioned to get out of this position right now if we have a more meaningful reaction. And I think this is where liquidity comes in on this short-term capitulation, and the CEO starts buying again. And that's why it's going to be so hard emotionally for somebody who did not get in to get in on the reaction like this. And then we've seen a lot of patterns like this where minus sign of strength then leads to a meaningful reaction to the support, and then after that the price goes up. Alternatively, I mean, like we could just have what Alessio is describing, just a shakeout of some sort as a spring, and then continuation to the upside. And then here is your stride to that higher target that we had of about 27.
Yes, that is the stride that I currently have in mind. Roman, not the structure could assume different forms, but that's my favorite stride right now because I clearly see this pattern on many charts on the crypto market. I've seen
Yeah.
this in the past, so be totally in line with what we have seen in 2019, for example.
Yeah.
Now let's
In
look at
this
the yeah.
in
No,
this
no,
type of opportunity, this would be after like the recovery and the test. This would be such a great place to establish the position.
Now, so let's look at the 4-hour chart here. So we are like in this small trading range. We do not see any sign of supply increasing supply on the volume signature, but we are stalling here. So we are unable in this market condition to make new highs. So this is in the short term is telling us that the demand for Bitcoin is a bit exhausted, and we see that there's a clear rotation to other assets. So basically, Bitcoin is the first leg to the upside, and then there's a bit of rotation into mid caps and there's more caps. So right now, Bitcoin is stalling. I suspect that we will see in the next weeks some kind of profit taking in the small caps, and then we'll see rotation back into Bitcoin. But this process usually um, uh, needs some kind of mini reaction for Bitcoin.
Yeah, weak demand, lower highs, suggestive that maybe this is like in the middle of the way to some lower prices. I mean, the key is obviously this bar right here. This is the breakout that had some buying behind it that extended nicely, above the resistance. So this is the line of defense. So anything in this area right here would be totally acceptable. And then the key is just to how do you get in?
Great. Same picture for Ethereum. I think on the when you look at this consolidation, it's a bit more constructive compared to what we are seeing on Bitcoin there, but the logic is the same. So there is no new demand coming to this in this consolidation, Roman. It's just profit taking after a very good rally.
Okay.
On the intraday time frame, we see that there is like this big consolidation, and basically I don't like, Roman, what we are seeing there with this very volatile price action the intraday. So usually this kind of price action is just the first part of a more complex formation.
Yes, a lot of volatility here, a lot of supply. Those are all supply spikes that come, at the points where the price is trying to get out. So there is still some supply available at the resistance. But uh, you know, we go down, we recover. We go down, we recover. We go down, we recover. So there is definitely that bullish undertone, bullish background. So we're still thinking bullish, but could short term produce some kind of more meaningful volatility. And then you know, Alyssa, here's the question: what if we just gonna go up like this? Like, what would be your tactic here?
Well, just a stop buy order there. So
Hmm.
we can even think about a very simple strategy where we have a stop buy order placed in resistance, and then
Hmm.
we look also for some opportunity at lower prices. So in both
Hmm.
situations, we are still into the position. Why not?
Yeah, yeah. So either here or here, depending. Okay, sounds great.
So there's a lot of short-term trading opportunities available in this market. So basically, I received a question about this chart, and I was showing some potential point of entry here. And Roman, what do you think about the tactic that we are seeing? So basically, the first point of attack was a point one. Basically, that was that break of the moving average. So my suggestion was let's wait for this level. I want to see more trading range with a further retesting at this level. So 0.1, 0.2, 0.3, and at 0.3, I was looking for a point of entry there.
Right here? Was this the
Yes,
bar?
exactly. So with a stop loss.
Mm-hmm.
And the same trade was available at point 4, but look at point 4. This is not a good entry since we have
Mm-hmm.
basically we have to trade with a stop loss which is quite close to the support there, because we have to remember that these assets are very volatile. So even the 15 minutes chart, we can't just place the stop loss too far away from the support. Uh,
Mm-hmm.
but for the rest, Roman, I think that this trading style could be still quite profitable in the long run, especially when you have strong trending, uptrending condition. I think that the second opportunity there is way more complex since the trade is reversed almost immediately. But
Mm-hmm.
I think this is quite easy style of trading for now. When the
Mm-hmm.
conditions of the market will deteriorate, this kind of opportunity will be not available.
Yeah. Well, first of all, you're looking at the 15, so you're going to have a lot of ups and downs there. So that's number one. Secondly, after the first point of entry, which I'm totally fine with, you have the background to the upside. On each of the reaction, there is a contraction of that volatility. There is a diminished selling. So I'm okay coming in where the first point of entry is. The only thing that I would be wary about is this, because it defines a lot of supply after supply came at the stopping action. So you know that in a way, this is kind of like a mini repeat of what we've had before. So if for the first time we went, that produced the stop in action and that produced the change of environment into the trading range, this is kind of the same. This is also a stop in action with this very, very high times, like maybe like 5 volume signature. So that also produces an idea of the trading range. So therefore, the second point of entry at 4 is a little bit of a question mark to me. Could we approach the resistance one more time and judge what kind of supply we're going to have? So supply maybe like minus 50%. And that's probably not enough, not sufficient, suggesting maybe there is another attempt, to go down and then approach it again. Here we don't see very big price spread that we want, for this type of entries, and then we're going into the spring. So this bar definitely that just like perfect, second point of entry. Let's say after this one right here. So that's how I would be thinking about
Mhm.
this. Another idea here is you gotta uh, you gotta catch um, the increase of the volume signature as your timing tool. So there are two places here where you could see that. The first one is here, and here's the volume signature. And then the second one is here, and where is it? I think this one right here. So, and there is a big distinction between those two. I mean, like, how much effort does it take to move the same distance of the price? And we cover this in WTC too, the ease of movement calculations. So this is a much easier move. This suggests less supply, so and therefore much higher probability to advance right away. So in a way, this acts as a timing to you, rather than, let's say, from here, right, we're going maybe like times 3 relative to the previous demand. This is a little bit too much, because whenever you see that type of times 3, times 5 volume spike, you know for sure there is supply in here. And then the next day you instantly recognize, yeah, this is a stop in action rather than just, a breakout. Yeah, so quite a lot of thoughts here.
Yeah, but still very tradable when you look at this
Oh
time
yeah,
frame. And I
and
think that the key is just the recognition amount of the trade environment. Because if you
yeah.
try to trade the 5 minute, for
Hmm.
example, when you have like a trendless environment, that's very, very tricky. So we do not have this kind of clean setups there available. But
Yeah.
now they're available.
And I would say it's stop loss is extremely important. Just give it a little bit of a room, like on point of entry number 1, point of entry number 2, but give it less room on point of entry number 3, because it gives you a much better character in the structure. to be closer to the actual risk point.
Mm-mm.
So I would definitely move the stop loss on this last point of entry.
Okay, so very nice case study. Now let's look at the candidates for this week. So basically, the laggards are trying to catch up here with the trend. We see that Matic is trying to break this huge consolidation. I suspect that we will encounter some kind of supply there, but look at volume signature. It's still very low compared to what we were seeing in the on the November high. So I think there is still room to the upside there, man. And
Hmm.
the logic is that we can just follow the 9-day moving average here, since that is the our our support, and we can just move our stop loss following that line. Because in case this finally have a breakout to the upside, we could actually have some kind of acceleration. So the 9-day moving average will be the support in that case. If we break and instead uh, we just reverse from here, well, just we are just out of this opportunity. But for
Hmm.
now, that 9-day moving average looks solid to me.
So 9 is which color?
Is the blue one, the blue
The
one,
blue one, yeah. Yeah, so that seems to be like the stride, but I also like the next one, which is what, 21?
21, yes.
21, yeah, that yellow one. So like two touches there or close ups. And yeah, I would probably be looking for some kind of opportunity with the 21 just to produce the a better swing right here. But yeah, looks really good. Very steadily up.
Then we have GMX. So I think this is time to see some kind of consolidation, maybe a major pullback here to create this making up action opportunity. Since this looks a bit overextended to me, Roman,
Hmm.
and look at the volatility that we still have in this asset. So we usually have like these peaks and then a huge reaction. So I would be surprised at all to see some kind of deep backing up action at the level of the
Hmm.
resistance support that you have drawn there. That would be a very good point of entry for a campaign in this asset, since the PNF target for this is much higher.
Hmm. Is this related to centralized, decentralized exchange or?
Decentralized, yes. So basically, this is the new space. Yeah.
Yeah, so it looks the same. The way the character with which the price moves looks the same, and then the structure, the shakeout, the test, and then kind of like this laborious way up. So yeah, the idea there is the same, right? The backup action.
And by the way, there are many semiconductors in the stock market that looks exactly like this, Roman. So
Hmm.
it's a
Hmm.
very, the two charts are almost identical.
Hmm.
Now let's look at small caps. So there's still some opportunity in the small cap sector. So this is very low liquidity environment, but I really like the formation that we have here. And so basically, I suspect that we will retest the high, and that could be like the end of this whole move for the altcoin market. Since I think that we're getting mixed signal, I think that the altcoin market is a bit overbought for many assets. So I think that this could be one of the last lagger to catch up with the trend, and then we will finally have a correction.
Hmm. Supply tails. So some supply is coming in, but every time, we come to the low here, we come slightly above the low, which is strength, and then we are trying to close and have the highest close here. So it still shows bullish activity when volatility starts to increase after the decreased volatility right here. So this is just an idea that supply is coming in based on the overall downtrend right here, and we're just trying to get through this. The this type of action, the recovery and the closes into this area are going to be somewhat important, and we probably going to take time. We might take some time, something like this, to overcome this area. But once we do, then there is a little uh, room to target one, target two.
Some volatility on the price action, which is not reflected in the supply signature, which is still contracting. So this is the pattern that we've seen since the very beginning of this uh, this leg up in the crypto market. And so basically, I think this is another lag that is finally catching up. And Roman, I suspect we are very, very close to break this level. So maybe another couple retests on the intraday, and then
Mhm.
we could attack the resistance around the 27 level,
Mhm.
$30,000 level, but still looks constructive here.
Yeah, looks constructive. Demand still dominates the supply. I mean, like look at the level of the demand, level of the supply. So it's like minus 50% from demand to supply signature. And we are supposed to consolidate. This volume signature right here, this is a consolidation, some kind of, testing. And yet, what are we doing? We're doing higher highs, higher lows. Also like how it's touching right now, the 21. So this could be a very interesting opportunity. Maybe like that would be the stride along the 21. So you will be maybe like buying along 21. This could be one of them, one of the first opportunities there.
OP is still in the uptrend, so I would have preferred a pause around the resistance there. But look at the volume signature, still constructive. So we have demand expanding, supply contracting there. So I would just wait for the retest of the 21 moving average and also retest of the relative strength line of the moving average. And yes, something like that.
Yeah, I would agree here. So we're seeing shortening of the thrust. After we hit the first resistance, we're trying to get to the second one. So maybe this is where there is some kind of deterioration of the momentum, suggesting some kind of reaction. Okay, so if we react, let's say maybe like into the body of this bar or this bar even, and then recover from there, that creates a much larger stride. So which is better. It has, the uptrend has more room there. And also, please note that demand is pretty stable, pretty consistent in the way how it increases. So if we don't have the increase of the supply like we've had right here on the FTX event, then we're probably going to have a much uh, uh, less aggressive reaction than here. That could be used as an opportunity, to establish the position somewhere there.
I have mentioned that many altcoin charts are showing signs of acceleration, but Roman, I suspect that we need to consolidate here for some time since the last bar was a bit climatic, and now the direction we are still in the 50% of that last move to the upside. But I would prefer to see more consolidation. That's my logic here. What do you think about this? Because this looks
Yeah,
a bit, yeah, too
yeah,
much.
a little bit too much of the supply, but participation is increasing, so that's also important to note. Yeah, this type of places where we come to the resistance, and here, I mean, like we're in the vicinity of this breakdown bar, which was extremely important. So supply naturally comes in. There is like this emotional memory for the sellers to sell again, and that's there. But look at the supply level relative to the demand. So again, still demand dominates over the supply, so we're still bullish. I would say like this bar right here is the most important bar right now. So if we have even lower reaction into, let's say, this area right here, and then recovery from there, that probably might create that type of opportunity. So Alessio, I'm seeing a lot today this type of setups where like short term we have maybe like some kind of short-term weakness, but the background is still pretty much bullish.
Yeah, for sure. And I think that just now the right tactics would be to focus on very short-term opportunities on intraday because there are still good setups to the long side there. But the next mini correction could provide a lot of value for us, and then we could enter the space in a much more aggressive allocation.
Mhm. All right. Well, with that, thank you guys so much for listening, for watching, and we'll talk to you next week. Thank you, Alessia.
Thank you, Omar.